Hi, this is Anita Bediakun here. I'm a realtor. However, I have been receiving a few questions about the new tax changes that has been proposed. I have many of my clients call me and ask, Anita, what do you know about the new tax changes happening? How does it affect me in real estate? And so on and so forth. So today I wanted to take a minute to kind of give a quick overview of my understanding of the taxes. So you are still going to be able to write off your interest, your mortgage interest this year and the years to come. That has not changed. So if you're planning on buying, you are still going to be able to write off your mortgage interest for 2017 tax period and the years thereafter. So the changes that has been proposed does not take place until next year tax season. So one thing I wanted to clarify is the taxes that we are filing in 2018 is for the taxes that we paid or tax activities that took place in 2017 tax year. So every taxes that you paid in 2017, we are filing in 2018 to claim it. So things have not changed on that front. However, starting 2019, when you go in and file your 2018 taxes, there are going to be some changes according to the proposed laws. So right now in 2017, if you're a single filer or married person filing separately, for standard deduction is 6,350, something to that effect. If you are filing as married person filing jointly, it's 12,000 for standard deduction. And if you're filing as a head of household, it's 9,300 or so. Starting in 2019 tax season, those standard deduction items are going up. If you're a married person filing separately or single, your standard deduction is going up to 12,000. If you're a head of household, it's going to be, I believe, 18,000. And if you're a married person filing jointly, is going up to 24,000 for 2019 tax season. So that's the changes there. What they've also done is they've eliminated what we call personal exemption. Personal exemption is the number of people listed on your taxes. So if you're a household of 6 people listed on your taxes, the personal exemption part of it does reduce your taxable income. So for this 2017, personal exemption, I believe, was $4,050 per person listed on your taxes. So if you're a family of 6, that is $24,000. That lowers your taxable income. Starting 2019 tax season, those personal exemptions are going to be eliminated. So that's where we get hit. Now, concerning people that choose to do standard deduction or itemization, the difference between standard deduction and itemization is that when you file a standard deduction, you do not need any documentation to support your taxes, really. But if you do itemize, like your medical bills, your property taxes, all those things, charity and all of that, that is itemization. That requires you to have documentation to support it should in case IRS were to audit you. But when you do a standard deduction, no documentation is required from IRS for any audit purposes. So that is the difference. One thing too that is changing for the proposed changes right now for child tax credit, it's $1,000 per child. With the new changes, is going up to $2,000 per child. So those are a few changes that is taking place. There are a lot of technicalities when it comes to taxes, but these 4 pointers that I've given are some of the basic things that most people are interested in, especially for the middle class family that are concerned so much about how the proposed changes are going to impact us in our day-to-day lives and in our day-to-day ability to perhaps pursue any real estate and such. So my name is Anita again. If you have any questions, you can reach me at 571-229-6694. I hope this has educated you in some form or shape. And I'm here to answer any of your questions that you may have. Thank you so much for taking the time to hear me out. Bye.